I get a lot of questions about quarterly estimated tax payments. In our last video, we talked about what these quarterly estimated tax payments actually are, who should be paying them, and when they're due. In today's video, I'm going to share how to calculate your estimated tax payments if you don't want to use our general rule of thumb of 40 to 45% of your net business income. So if you want to take a deeper dive and get a little more precise on those calculations for your quarterly estimated tax payments, today's video is for you. First, let's do a real quick summary of what quarterly estimated tax payments are. When you have any sort of income on your tax return, you're going to be responsible for income tax on that income. If and when any of that income is earned income, then you're going to owe your payroll / self-employment tax on that earned income. W-2 employees pay their payroll taxes through their W-2 wages. If you're self-employed, you're going to have to make those quarterly estimated tax payments for that piece of your self-employment income. That's what covers your Medicare and your Social Security payments to the government. And because the IRS wants you to pay your taxes as you're earning the money, right? They don't want you to wait until you file your tax return. When you do that, there's going to be penalties and interest. So they've adapted this quarterly estimated tax payment system so you can remit your quarterly estimated tax payments for your income and self-employment taxes on a quarterly basis, so they're more in line with you earning the income. Okay, so we're going to talk about how you calculate these quarterly estimated tax payment amounts. For those of you who do not want to do calculations, I mentioned earlier that we have a general rule of thumb, 40 to 45%. That is enough to cover typically your income tax if you're in the most common 22% tax bracket, your self-employment income tax of 16%, plus leaves a small cushion for your state income tax if you're in a state that has state income tax assessed. If you would prefer a tad more accuracy as you're calculating and making these quarterly estimated tax payments, and you don't mind putting in a little bit of legwork, then I highly recommend you download our free estimated tax payment calculator. You can use that and you can actually follow along with the steps I'm going to tell you, and it'll help you get a little bit more accurate on how much to make each quarter within those tax payments. So hopefully you paused this video, you went and downloaded the worksheet, and you're looking at it. Okay, quick disclaimer, you guys, in order for this worksheet or this calculator to do its job, you do have to have accurate figures from your business. This means having accurate financials. You need to know your gross income that you have coming into the business, and you need to know your expenses that you've paid out for the quarter, because you need to have your net profit or your net income from the business for the quarter in order to base this whole calculation off of. We talk about junk in, junk out, data in, data out, okay? The estimated tax payments that this calculator is going to kick out are only as good as the data and the information you're putting into it, all right? So if that's something you need help on, I have a ton of videos from the past or previous videos that you can check out on how to get your books updated and accurate. So go ahead and open your calculator, and we'll walk through this step by step. So before you even touch anything on the calculator, step one is to determine your net taxable income. So this figure can come from numerous places, you guys. If you're using a Google spreadsheet or an Excel spreadsheet, that number is going to just be all of your income for the quarter minus all of your expenses for the quarter from those worksheets, and that number is going to be your net income. If you're using a software, a bookkeeping software like Xero or QuickBooks Online or QuickBooks Desktop, you're simply going to run your P&L, your profit and loss, for the quarter period that we are making a quarterly estimated tax payment for. So for first quarter, that's going to be January 1st through March 31st. For second quarter, that's going to be April 1st through it's supposed to be through June if you're thinking on a quarterly, but the IRS is weird. So your second quarter is actually only going to be, this is so silly, right? Is only going to be April 1st through May 31st because that payment's due June 15th. Your third quarter then, you guys, is going to be weird. It's going to include June, so June 1st through August 31st, so three-month period there. And then your fourth quarter payment is going to be September 1st through the end of the year, through December 31st. And that calculator has these dates all outlined for you. It's fantastic. So you've run your net income from whatever platform or method you're using, and you guys are simply going to take your net income amount, again, gross income, minus all of your expenses, and that net income is going to go into column C of your calculator. So step 2 is going to be determining your marginal tax rate. So remember that your income tax is based on your marginal tax rate. Your self-employment tax that we'll get to in a minute, set amount. But your income tax is based on a marginal tax rate. And what that means, I have a whole video if you want to get into detail, but the more you make, the more your income tax you're going to pay on those higher amounts. So in this second step, the first piece, like step 2A, is determining your year-to-date income. And that's going to be done in the worksheet, you guys. Column D is going to calculate your year-to-date income for you. That is all done. If your first quarter is going to be the same, your first quarter income is going to be equivalent to your year-to-date for first quarter, but for your second, third, and fourth quarters, it's going to add all of the previous quarters so that you know what your year-to-date income is. You are then going to take that number from the quarter you're working on in column D, and you're going to look at the marginal tax bracket at the bottom of the calculator and figure out, based on your tax situation, what income tax or marginal tax rate you are in. So pardon me while I look at my calculator, my marginal tax rate for a minute, but if your year-to-date income is $50,000 and you are single, then that falls in the 22% tax bracket, and so you are going to put 22% up in column E for whatever quarter you're working on. Step 3, this is the fun one, let the spreadsheet do the work. So the spreadsheet is going to calculate your income tax based on your year-to-date income, your marginal tax bracket, all those things. It's going to add it into your self-employment income based on that quarter's earned income, and it's going to tell you exactly how much you should be paying to your different taxing agencies. If you're looking at the spreadsheet, column H is where you're going to find your suggested federal tax payment for the quarter. If you are in a state that includes state income tax, that's going to be in column I. I have it set currently to Colorado because that's where I am and that's where the majority of my clients are, but you are welcome to easily look up your state's income tax rate and put that percentage into the calculator, and it'll calculate your state's income rate instead. So hopefully that calculator helps you and it makes a lot of sense. I do have a few just end caveats to share with you guys, okay? So if your business income is not your main source or only source of income, your other income could kick you into a higher marginal tax bracket. If that's the case, you may want to enter your own tax bracket based on all of your income into column E rather than just off of your business income. Another thing that may pop up if your business isn't your only source of income is you could have losses that offset some income. So you could have losses from this business that you put them in the calculator and nothing's due. That's great. You don't have to make those payments, but it could also be offsetting some of your other income. The flip of that, you may have some losses from outside of your business that could actually decrease the tax due, because all of a sudden done, you guys, all of your income tax and your self-employment tax is all run through and paid through your tax return, right? The IRS doesn't look and say, oh, your business owed $10,000 in taxes and didn't pay anything, but you overpaid on W-2 wages. So they don't like give that money back and then make you pay it. It all nets out and it all pays against one another. So the last piece is, how do you make these quarterly estimated payments? You guys, the IRS and the Colorado links I've actually included on the calculator that you can link to, and you can make those payments electronically. If you're in any other state, again, I encourage you to just check your state's Department of Revenue, and they will have an online system that'll help you make those payments electronically. I do recommend making those payments electronically because mailing a check, guys, can cause some issues. All right, they can get lost in the mail. Even if you mail it certified so you can track and see that yes, the IRS got it. But checks can have been known to be applied to the wrong account. They eventually find it. It's things you can eventually straighten out, but it can lead to a lot of headaches. Making those payments electronically is the easiest way to avoid future headaches from mix-ups on either the post office or the IRS's side. So I really hope that this video helps you and that this calculator helps you as much as it has some of my other taxpayers that have used it in the past. If you guys have any questions about what we talked about today, go ahead and leave a comment below. And then I highly suggest you head on over to our Facebook community, Money, Taxes, and Finance for Small Business, because these topics are what we talk about on a regular basis and have live trainings on every week. You can access that group by clicking the link in the description box. Thanks for watching. If you found this video helpful, please give it a thumbs up, subscribe, and while you're loving on me hard, go ahead and hit the notification bell so you never miss a future video.